Well, good morning and welcome to our May 20th dialogues. We have with us today Dr. Matt Elliott, and he's going to talk about a grain market outlook for the rest of 2022. So we'll just turn him over to Matt and we'll get started here.
Okay, thank you, Jack. As Jack mentioned, I'm Matthew Elliott. I'm in the Ness School of Management and Economics. I'm an associate professor and the agribusiness state specialist. So today I was going to talk a little bit about what's going on in the grain markets, what we're kind of looking at as we progress here in 2022. Most of the data that I'm going to be talking about you can find on our grain interactive grain report that we have online. The URL is agland.sdstate.edu/grain. It looks like this. There's lots of charts and different things that you can track and monitor. It feeds automatically. So sometimes there's errors and different things, but I try to keep track of it if there is and correct those. But there's a lot of information on the markets and particularly the fundamentals. And you can do a lot of different interactive features in order to filter the data and see what's going on. So today, just kind of an overview of what we're going to be talking about. Obviously, the main story in the grain markets this year is going to be the Ukraine conflict. Right now we're in a very bullish market, especially for corn and wheat because of the Ukraine conflict. And so we'll talk a lot about that here today, and then just kind of thinking about expected production impacts for corn and for wheat in the U.S. In particular as we go forward. So, Ukraine is a major exporter of corn, primarily to China. Also, Ukraine's a primary exporter of wheat to Middle Eastern countries. And then they also are a big processor of sunflower oil that contributes to the world vegetable oil complex. And so those three areas is really where we're seeing the largest impacts in price because of the Ukrainian conflict. So far, exports out of Ukraine have been significantly reduced since the conflict started, partly because, Russia's not allowing any ships. There's missiles conflict going on so that, nobody can really do anything or export in most of the country. There are some exports from Ukraine that are still occurring by rail into neighboring countries in inland Europe and also down into Romania. We're seeing pickups and exports out of the major port in Romania there. And so there are some exports that continue to make their way out. In fact, yesterday's news item was the UN is really concerned about, the larger impacts for hunger and is wanting to get a resolution to the conflict, or at least where Russia would allow grain to be exported out of Ukraine because of the concerns for hunger and food riots that we saw in 2012 when we had these types of shortages in some of these countries, and we saw a lot of social disruption from that. So we'll first talk about corn. Corn, as we're going forward, the primary drivers is just how long is this Ukrainian conflict going to last? Will exports continue to be restricted? We were already in a tighter stocks to use situation here in the United States before the Ukrainian conflict started. So right now we're projecting about a 9.3% ending stocks to use. So that's just ending stocks divided by total use. That's expected to be here at the end of the marketing year. And 9.3% is pretty tight. It's not as tight as we've ever been, but in more recent years, we've been hovering around that 15%. And so prices were high already coming into this marketing year. And then the Ukrainian thing happened and it created increasing bullishness in prices. And we'll show that on the chart. Also, what was kind of bullish here was we just had the March planting report. Those are the intended planted acres that producers responded to. That survey result came in that producers intend to plant about 89 million acres of corn in the United States. That was about 3 million acres less than what the market expected. The market was about 92 million acres, and so that was a bullish aspect. And as we look forward to this growing season, obviously the July weather during that critical pollination period is going to be critical. That's going to, probably push the market one way or the other, depending if it's bullish or bearish weather for production purposes. So here's the December corn chart for new crop corn. I have the change in the corn market since the Ukrainian conflict, since Russia started invaded Ukraine on February 24th. We've gone from about 577 a bushel on that December contract to up to 730 now. So 26% increase. The markets have reacted to, or basically pricing that lost Ukraine export market into our prices. And so that's a big impact here. So as we're looking forward, you look at the recent trends. So we got major, after the major change in price or major increase in price from a technical analysis standpoint, we're still kind of on an upward trend here in the last 20, 30 days, but maybe not nearly as steep as, those initial few days after the Ukrainian conflict started. We're still, projecting somewhere we might see some $8 corn on new crop, especially if the weather's bullish here later on. So as long as this kind of upward trend holds, or I think it will continue to hold as long as this Ukrainian conflict continues and they're basically off the export market for their corn. So stocks to use percentages, as I mentioned, we are projecting 9.3% stocks to use. And so a stocks to use percentage on this x-axis, and then the current May futures price, and we're looking at all the different years. So $8 corn, where we're trading May corn right now with a 9.3% projected stocks to use, is probably a little bit high relative to some previous years. As I mentioned, in 2011, we had tighter stocks to use projected at that point in time, and we were only trading a May price of around 710. And so you can see kind of, you expect this downward relationship between price and stocks to use percent. And so we're kind of a little bit above what an interpolation line would draw through these different points in more recent years. So, world corn prices in export and import markets have definitely all kind of responded to the Ukrainian event. Perhaps the one market that hasn't responded that much to it is China. Their Chinese market, their price is still roughly around $10 or $11 a bushel after you adjust for currency and in the different metric units. And so you can see that though most of the major export areas like the Black Sea, Argentina, and US, for example, and Brazil have all seen increases in price because of the Ukrainian conflict. So as we look at the seasonality, seasonally, usually we see the best chances for high prices in that June, July period. And this is what this chart is showing. It's showing how much did the percentage of that new crop contract change from the 1st of January to when it basically expires in December of that year. And here in 2022, obviously, we've had a big change from those December or January 1 prices because of that Ukrainian conflict. So we're about 30% above what we were doing there in January 1. And typically, historically, like I said, we see about a 10-20% increase above January 1 prices because of weather issues and different things. But obviously we're way ahead of that game. And we were too last year, and that was because of early season dryness and also a very hot export market that I'll talk about here in just a second. So, if we look at the top 5 world corn exporters in the world, It's no surprise, Ukraine's right here. There's been a bigger wedge in the world corn export market here more recently. In 2021, for example, they exported 23 million metric tons. Now, right now, currently forecasted for this year about 9 million metric tons. Where they actually even get 9 million metric tons will depend a lot on that conflict. And so that's what's happened, is that we've lost a big wedge in that potential export market for corn. And as I mentioned before, China has imported corn more recently, and one of the major suppliers of that corn that they bring into China is from Ukraine, and Ukraine's here indicated in the red. And this is by monthly. Last year, for example, they exported somewhere about 2-3 million metric tons a month, or 500,000 metric tons, so 2-3 million metric tons. And so they were doing that here in late last year. And then because of the conflict, they basically haven't brought any corn from Ukraine into China. It's all come from the United States. One of the big drivers for last year's changes in the market that got bullish was kind of the unexpected Chinese demand in the summer. The question is will China continue to want to import corn into their country here this year? So far, their tendency 2022 being here in the red, and then the 2021 being how they imported in 2021 in the blue. So you could see we're kind of like on that same path. And so if we do see this big Chinese corn import this summer, that'll be very bullish. It's probably not somewhat expected in the market, and it'll increasingly drive up prices. Do we have a question or? Okay, I'm going to continue. So as we're looking at Ukrainian monthly corn exports, obviously Ukraine here in about January was doing about 4.5 million metric tons of corn exports. Obviously, since the conflict started, that's down to about 100,000 metric tons. So definitely just a trickle coming out of Ukraine now because of the conflict. If you turn to where U.S. exports buy it on a monthly basis, again, China's here in this mainland China's in this area, this brown goldish kind of color. Somehow I got muted, sorry. So yeah, they're a major import. China's a major importer of our corn, and so they kind of drive our corn export variation, and so that's going to be one to watch is the Chinese corn market, and if they import U.S. corn. So as we're looking at seasonal corn and how we are on pace, we're about average, I guess, for the last few years for corn exports. Here in 22, if you're looking at a monthly basis. And so there's not really any indication to say one way or the other. So this is just as we're looking forward to July weather and then what that means for how USDA might change yields. This is kind of a chart, not really as well done as I'd like to have it, but kind of just showing all those different USDA yield changes they have done in these different years at the different periods. And usually there's not too many changes, but like for example, last year, they started out with a very low yield because of that early season dryness at 174. They increased it to 177 by the end of the December or January yield estimate. And that's basically where it stayed. And that's where we're starting out in this year as expected trendline yield for 177 bushels per acre. So, watching the weather and then seeing what USDA does for those yield changes this summer and going into the fall is going to have probably, always does have impacts on the market. The other aspect about Ukraine I'm going to talk about is wheat. Again, the Ukraine conflict is what's driving the wheat market right now to be very bullish. Our stocks to use situation in the U.S. is not, that tight. I mean, it's tighter than it has been in recent years, but we're at 32.8%. And we, in 2012 and 2008 and some of those years, we were down to around 20%, 20 to 30%. So it was tighter then. And so, that's something that we kind of built in these big bullish prices because we just think the market thinks that this Ukrainian conflict is going to cause some real problems potentially here in the very near future for, world wheat demand. So that's something we got to watch if the Ukrainian conflict continues, or if Ukraine is able to start exporting, then that bullishness would really come out quickly of the wheat market. Also in the U.S. is that we've seen some pretty poor conditions in the Southern Plains HRW wheat region because of dryness. So productions are expected to be down, but maybe even further down than what the market's expecting right now. So that's something to continue to monitor. The problem with wheat is there's so many producers in the world. Even if you have an isolated production shortfall like in the Southern Plains, typically could be an offsetting higher production region like Australia or Canada or somewhere else that offsets any type of lost production here that could happen in the United States. So if we look at how July Kansas City HRW wheat has changed since the conflict started on February 24th, we've seen a larger increase than we saw in the corn market. We've seen 44.71% increase. We went from $8.81 a bushel. We were trading in July wheat to now we're at $12.75 here yesterday. So a big jump because of the Ukrainian conflict. And again, just similar to what we're seeing in the corn market, the technical analysis shows in the last 20, 30 days, a continued upward trend, projecting somewhere around maybe $13 a bushel, would not be out of the territory here as we approach the end of June. So that's something to watch, and we could maybe even see some $14 prices if the conflict continues and export market and different things happen in the world import markets that would cause even further bullishness. So as I mentioned before, so stocks to use right now we're at 32.8% projected, and we're trading $12 on the May right now. And so that's pretty high for a relative price. Most, we were tighter for stocks to use here in 2014, 2011, 2013, and 2012, and we had lower prices then. So there's a lot of bullishness built in to the market right now because of the Ukrainian conflict in the wheat market. And so that's something to watch. If that Ukraine thing goes away, fundamentally, we probably should be more down here in this area. World wheat prices have all kind of responded in the import export locations for these major areas appropriately because of the Ukrainian conflict. Australia, after you do currency conversions and everything, they have somewhat like $18.35 a bushel for their wheat. For example, China, we've even seen some increases in their wheat prices. They're up at $12.86. So, we're seeing the impact of the Ukrainian conflict in worldwide in these import and export locations. Seasonality, typically there's some type of positive seasonality, maybe, in that May, June period when you get some weather factors. But we don't nearly see the seasonality in wheat in the last few years that we do in corn. Except this year we're seeing this big change from our prices here where we started in last July because of the fact of the Ukrainian conflict. And so we built in almost 100% above what our last July prices were because of the Ukrainian conflict. Again, Ukraine's a major exporter of wheat, one of the top 5 exporters of wheat. They're indicated here in this brown area. So they typically about 19 million metric tons. Right now, they're projecting about 10 million metric tons being exported out of Ukraine this year. So about half of what they're typically doing here in the last few years. Whether that's even achievable, we'll see. It just really depends on how long this conflict lasts, and then what kind of production they can even create in the war-torn country that they're Ukrainian in the current situation it is in right now. So as I mentioned, a lot of Ukrainian wheat goes to the Middle East market. So Egypt's a big Middle East importer of wheat. In the red is how much wheat that Egypt typically imports from Ukraine. And then in green is how much wheat they import from Russia. Egypt hasn't imported much wheat from the United States for a long time. We used to be one of their major exporters, but now we're not. Romania here is in brown, so you can see here in the last few months, Romania has picked up quite a bit more wheat exports to Egypt because Ukraine has basically dropped off almost nearly completely in the last couple of months. And so we'll see. Russia also increased some here in April to Egypt, but we'll see what happens and who's going to continue to supply Egypt with the pretty robust demand for wheat. Seasonally, Egypt, they have this kind of lull in their imports for June. So we kind of got this period where they don't typically import very much between May and June. They're waiting for those new harvests in the Northern Hemisphere and to get that cheaper new crop supply. What they're going to do here in June will be interesting. But then, as we get into July and August, they usually increase their imports in order to buy all that new crop wheat and to satisfy their demand. And just how they handle this wheat, the wheat complex this year will be very interesting to monitor and see. And then, like I said on the last chart, who makes up that import component? Where is it coming from? And so if we look at how Ukraine typically has exported wheat on a monthly basis here in the last few years, most of their wheat that they are exporting, a large portion of it goes out right after harvest there in August and in September. So if the conflict continues, here's the Ukrainian wheat exports. They did about 1.5 million metric tons here in February before the conflict. That basically went down to about 36,800 metric tons here in May. If we're not able to get up there to 4.5 million metric tons here in August and September out of Ukraine, I mean, that's where that expected tightness in the wheat markets is coming from. I mean, if we miss this period that they've been there and that, exporting there in August and September, it's going to have that real crunch in world export or in the world wheat market. So that's something to watch and monitor, see how Ukraine is able to export and if any other countries are picking up a little bit like Romania and so forth. So something to keep an eye on. As for US monthly exports and where it's going, we actually haven't really changed much in our exports since the Ukrainian conflict, probably a little bit lower than what we've been in the last few years. Most of our wheat exports are going to Asia, Japan, Indonesia, the Philippines, and so forth, and Mexico. And because of these higher prices, some of them have cut back. And so we are seeing some demand rationing in those countries because of that. And so we're just not really exporting much wheat. But, if this changes, so we start seeing Middle Eastern countries pop in here more and more, that's going to be very bullish to the market. They're going to try to protect what supply we have here. We'll have to raise prices to ration some of that demand so we don't get ourselves in too tight of a wheat ending stocks to use situation here in the United States. As I mentioned, so seasonally we're a little bit low on our wheat exports this year compared to where we have been in the last few years. The price rationing that has occurred in the last couple of months has basically kind of taken us out of the wheat market for a lot of places. And so we're just trying to ration that demand, whether the market's over rationing or not. I mean, well, that's an argument that you can make. It might be true, but there is some concern, especially as we get into August, September, that there might be a whole bunch of demand that because that Ukraine conflict has not resolved itself. And so that's something to watch here in the next couple months, and to see if we see a lot of non-traditional buyers in the United States wheat market in order to satisfy their demand, and if they're willing to pay these types of prices or even higher prices. So just one last thing to talk about, sunflower oil and sunflowers is the other major kind of export impact that we've seen because of the Ukrainian conflict. So I'm showing the soybean oil change, which is largely correlated with the sunflower prices here in the United States. And so we can see, since the Ukrainian conflict, we've seen sunflower or soybean oil here in the United States jump from $63 to $73, about 14%. And that's pushing up oil sunflower prices here in the US and in South Dakota. So that's something to keep an eye on too, as the Ukrainian conflict continues to go on. I have a soybean chart here. We haven't seen the soybean market is not nearly as bullish on a new crop as all these markets that I'm showing you. It's kind of more of a flat trend at this point in time on the new crop November contract. And so between soybean oil, corn, and wheat, those are the ones to watch. And especially if the Ukrainian conflict, there's some kind of resolution, or Ukraine starts able to export, or it's not as severe, or if it's even maybe worse than what the current things are projecting, that's all going to be a major driver as we're going through the season. And if we add on top of that some kind of weather problem here in the United States for corn and soybeans, things could get very bullish real quickly, and we can see some, very record high prices. I would imagine. So lot to watch, a lot to keep on top of, especially regarding Ukraine and their exports, and we'll just have to see what goes on. But a lot of volatility I would expect as we go forward. With that, here's my contact information. I'll take some questions if we have any. But again, we have this website here if you want to go to it and see some of this information. And if we have requests for information to see, we take that and we can add that to our interactive grain report as well. So you can send me an email if you want to see something, or you want to see a data certain way. We can certainly try to accommodate you. So do we have any questions?